Welcome to my August property update report. For anyone that's previously listened to my reports, I've mentioned that the majority of international buyers buying in the Oxford area originate from the United States, and national buyers looking to purchase in Oxford are migrating from the London area. So a quick insight into the prime London market would be good, as activity there ripples into the dynamics of the property market in Oxford. So in London, property values remain 22 to 22.4% below their 2014 peak in nominal terms. And so currently, prices in London are offering the greatest value for buyers looking to purchase in over a decade. Quarter 2 2025 saw prices decline by 1.5% quarterly and 3.7% annually. 8% of all listings saw asking price reductions. Sales in the super prime market of £10 million and upwards are still elevated, although many properties are conceding up to 19.5% of the asking price to achieve a house sale. And so, onto the main marketing report. Buyers' choices have increased, with 14% more homes now on the market compared to a year ago. This greater availability is helping to support higher sales volumes, but is a key factor putting downward pressure on house prices. The annual rate of house price growth slowed to 2.1% in June compared to 3.5% in May. Across the prime market in England and Wales, the average price for a property is £1.139 million, which is down 8.8% year on year. Transactions bounced back in May with a 25% month-on-month increase following a significant dip in April, following the surge in activity to meet the stamp duty deadline. Other market indicators are showing positive signs. The number of sales that are being agreed is running at its fastest pace in 4 years, currently 6% above last year's levels, suggesting that transaction activity will pick up speed. And mortgage approvals rose sharply, up 20% between April and May, with volumes now just 9% below last year's figures. With mortgage rates continuing to ease, overall market confidence remains strong. The proportion of cash buyers has fallen, with 27% of current property sales funded by cash from 33% a year ago. This follows a short rise in cash purchases in 2023 and 2024 when higher interest rates disencouraged mortgage borrowing. As rates begin to ease and mortgage amounts increased, the property market is returning to its long-term average. So to summarise, the property market in London remains sluggish, and this is impacting the property market in Oxford. Sales are up on year, but stock levels are up considerably, so it's absolutely critical that your property stands out and receives the maximum level of exposure, and this can be achieved through brilliant bespoke marketing. In a nutshell, your property needs to out-market your competition. And I think it's important to mention that so far this year, I have achieved 102% over the asking price on my property sales. If you want to know how I achieved this, please call me. The telephone number will follow the video. Thanks again for watching.